Welcome to RANsquawk's e-morning briefing for Friday the 8th of January 2010. Things very much light on volumes, which as expected ahead of the all-important non-farms payroll, which we'll see later on in the session. Obviously today could mark the snapping of a 23-month loss in US jobs, with consensus today on those surveyed on Bloomberg for a zero print in non-farms, and a lot of speculation building of a potential positive number. Could be even as high as 100,000 plus, given some of the attention which was paid to an article citing those analysts as Stefan Nikolaus yesterday. So anything less than a positive number could well be greeted very disappointed by the market. The unemployment rate, that doesn't tend to be the focus at the moment. That is expected to remain at the 10% level. It will be the headline payroll number which traders will be looking at to guide direction for today's trading session. In terms of where we stand at the moment, following a bit of a downtick in T-notes during the Asian session, bunds are trading lower and pretty much sideways in a light volume fashion as mentioned. Equities in marginal positive territory in the FTSE, CAC and DAX. In terms of some of the movements that we have seen in the economic data, the latest PPI numbers coming out of the UK all exceeded expectations by quite a large margin. And we have seen cable in the currencies trading up around 100 pips at the moment. And again, that will obviously be looked at by the Bank of England and could well prompt further speculation that the QE programme of 200 billion will indeed come to a close next month in February. Elsewhere as well in sterling and the currency is worth noting, following 2 consecutive days of downward moves following some of the concerns over the ruling Labour government, we're seeing a bit of a pare back technically of those losses as well. Elsewhere, we have seen some movement in the Japanese yen, weakening across the board after Japanese Finance Minister Naoto Kan said that currency levels should be determined by markets, backtracking somewhat from his earlier call we had yesterday for a weaker yen, dollar yen down around 50 pips this morning. Other US related news that is worth noting is that US regulators, including the Fed, warned banks to guard against possible losses from an end to low interest rates and reduce exposure or raise capital if needed. Taking a look then in terms of the calendar, we're looking out for Eurozone GDP shortly. That's the Q3 final, so not expecting any revisions there. Q on Q expected 0.4% and year-on-year minus 4.1%. Unemployment expected though to tick up to 9.9%, so getting ever closer to that 10% unemployment level in the Eurozone. And then non-farm payrolls, that'll be the main focus for today. That's due at 1:30 London, so that will be followed as well by some wholesale inventories at 3 o'clock, ECRI weekly due at 3:30, and Fed's Rosengrain, Kroger and Fed's Lacquer all due to speak later in the session.